Good afternoon, everybody, and welcome to Interactive Brokers webinar program. This is Andrew Wilkinson coming to you live from New York State, and today's guest will be Frank Kaberna from the Small Exchange, and he's going to be teaching us about how to trade pairs with small futures contract at the Small Exchange. Before I hand over to Frank, just a couple of pieces of housekeeping. Please enter questions for Frank into the GoToWebinar question panel, and we'll try and get all those questions in front of Frank before the end of the session. He's going to answer as many questions as possible. And today's session is indeed being recorded, so if you have to dash or want to have a look at the overall program later on the website, it will be available for anytime download, and we'll probably put it onto the IBKR YouTube channel as well if you're a subscriber there, and you can access that for free too. So if you have questions, the question panel. If you want to get hold of today's presentation notes, please go to the handout section in the GoToWebinar panel, expand that, and you'll find a PDF link in there for what Frank is about to talk about. So without further ado, I'd like to welcome Frank Kaberna from the Small Exchange. And Frank, please take it away.
Thanks so much, Andrew. It's a real pleasure to be working with you. Andrew, those of you who don't know, is a top 5 guy in finance that I've encountered. Great dude, and love doing webinars for the audience here at IBKR. We're going to have a ton of fun. Before we have fun, though, a little bit of disclosure action. So please take a look here at some very fine words that outline the risks and everything involved with trading futures. And we will sit here for a couple more seconds. Tick tock, tick tock. Hopefully you've had enough time to read. And now let's have some fun. So we're going to talk about pairs trading here with the smalls. Very exciting premise. Asking the active trader out there who has bought and sold futures, stocks, options, what have you, to take the next step in your trading and essentially just put 2 of those markets against each other. You got yourself a pairs and a unique opportunity that has a bunch of different pros that we will outline throughout the presentation here today. Before I dip into the presentation, just want to hit it one more time. Please put any questions throughout the presentation in the questions section here. We're going to get to as many of them as possible. If they have to do with pairs, they have to do with small exchange futures, futures at large, whatever you got, throw it in there, and we will try to get that answered here today for you. So let's get into my own disclosure here. Andrew thought that, he was the only one who had a disclosure for the people. Well, I got one of my own that I will get in trouble from our compliance officer if I don't show you. So check that out. It's got some words that you can read, and let's move on. Pairs trading, just purely defined as a neutral strategy that uses offsetting positions in 2 highly correlated products. Now, the 2 main characters that we're going to focus on for the start of this presentation will end in a new and different world of interest rates. Later on, Small Exchange just launched some really cool, really innovative products in the interest rate world. We will get to that later, but first we're going to focus on stocks, and what we have here is STX SME. That is a technology equity index future. 75 SME is an equity index future as well, but that's more of a broad market. That's similar to your Russells, your Dow, your S&Ps, whereby there are technology stocks in there, but there's also energy, industrials, financials, all different types of stocks. And so what you have in front of you is a relationship of more or less the stock market at large in that 75 piece, and then the technology stocks, of which that stock market at large, they are a portion. And those, like I said, will be the 2 characters that will kind of bounce around here as we continue to define what pairs trading is. I want to go through how you generate some ideas in pairs, and then finally conclude with, how do I ratio these things out? How do I know how much of this one I'm supposed to put against that one? When is it interesting? When should I be putting this thing on? But first, let's just work towards getting this idea clear in your mind. And one good way of doing that is to visualize it, because what you have here is one line, one price, essentially, that is the combination of those two markets. So all we did here is combine these two markets that I just showed you here into one pairs or spread market. And I like to think of these when you're trading pairs or you're thinking about pairs as just its own entity here. It's, this is the 75 product minus the sticks product. And as you can see already, one of the big pros of this pairs trading, you give a little extra effort to add some more tools to your tool belt in trading. It's a totally unique and diversified market. This pairs market is relative to what you see here. Stock market in the last year saw that dip in February and March as pandemic news is breaking out. But other than that, it's been a grind higher for the most part. You look at this pairs market, when you combine the two together, you've got back and forth. You've got a market that's going to the lows, a big bounce back higher, and a totally different type of price action here in that pairs market. Now, what is the thing that we're technically looking at in that pairs market? Well, it's essentially just a group of stocks against another group of stocks. And what's really nice about this is it changes the question from, will Tesla, FCX, CRWD, these single stocks, do I think they'll go higher or lower? It changes the question to, do I think they will outperform or underperform, Zillow, Snapchat, and this other group of stocks? And so it gives you, when you're looking at your equity index futures or your single stocks or your ETFs, it gives you just more permutations of potential opportunity. In my mind, it's really liberating when you can go from the simple question of, all right, it's Thursday afternoon, up or down, what do you think? And you can put on here a different type of trade that can achieve positive returns, which is what we're all after in bearish or bullish markets, because what you're trading on depends on the relationships, how this one basket of stocks relates to the other, not necessarily, oh, I need to buy or sell this, and my profits are going to completely depend on just a bullish or bearish market. Adding more tools to the tool belt here, what does that do for you? Well, it allows you to speculate on relationships and not just the direction of those assets, like I just spoke to a little bit there. Very empowering feeling, adding just unique strategies there to your watch list or whatever you look at there. And it offsets risk of a single market, which we'll get to a little bit later, allowing traders to extend time in their trades. A big historical pitfall of futures that the small exchange is absolutely not shying away from is the fact that those historically big traditional products can make trading them a little bit unwieldy and force the everyday trader into very small, just in terms of time frame, short-term trades, because those traditional markets will move, hundreds or thousands of dollars. What you'll see later on is that these pairs market can actually offset some of the risk and take down, a market that moves a couple hundred or $1,000 per day to potentially half of that. We'll get to that a little later. And just the mere diversification away from directional trades in a single asset class, because I know from my own experiences, when you have positions on, maybe you're active enough that you have positions on in equities and in metals and energies and a few other places, but sometimes you feel like you have your hands tied because it's like, well, on Monday, I put in all my directional trades there. So here on Thursday, I can't put anything else on. I've already, gone long here and short there. What's really nice is that you can have a long or short bias in an asset class like equities, and these pairs trades are unique opportunities that you can feel free to, add or subtract throughout the week or month or year. And so let's start the story here. Hopefully you've got a good grasp of, what pairs trading is, what it has to offer. Now let's look into actually generating some pairs trading ideas and structuring them in your platforms. At the end of the day, we want to take this idea all the way to execution for you all. That's the name of the game with this IBKR webinar. So we're starting with our first character here, which is the 75 SME, the small stocks futures, which is a diverse equity index future. It's got financial stocks, it's got energy stocks, technology stocks as well. And you can see, looks like most of your other equity indexes that you have out there, like S&Ps and Dow and everything else. Now, where do you find opportunity? And this is a question that I get very often because I, thankfully, not to toot my own horn, but I studied math, and so I do a lot of number crunching, and so I can find correlations pretty easily by downloading data and going through Excel sheets. I don't want you all to have to do that every time you think that there's a potential opportunity, and I would contend that you don't need to do it if you're able to reason stuff out. For instance, we started with the 75 SME, right? We have these 5 sectors that contribute stocks to this equity index future. You can simply just think about the fact that, oh, technology is a main sector of this equity index. Well, I can trade technology against that index at large. I could trade materials, industrials, financials, energies. This is a prime example of finding pairs opportunity, is simply breaking down the market that you're looking at and kind of moving vertically down a level and saying, for instance, technology over the last year or so has outperformed this stock market at large. Maybe I look at those two things converging. Maybe I look at them continuing to diverge. That's already in your mind, hopefully getting some gear shifting. And that works for, any asset class. We're focusing on stocks here, but the same goes for, energies or metals even. You don't necessarily need to crunch a bunch of numbers to look at a chart of gold and silver and be like, those two things look similar. I could probably pairs trade them. So correlations are huge, and they work to tell you maybe this pairs trade is better than this other pairs trade because it has a higher correlation. But as you can see here, you can kind of reason out some of those opportunities. And also, you don't have to necessarily move vertically. You can move laterally as well with these pairs trades. You've got here in green, the SM75, or for IBKR here, the 75 SME product, and you can compare it directly to your NASDAQs, your Russells, your S&Ps and Dows. And what you see is that correlation piece breaking down here to a high positive correlation, which just tells you that in the long term, these markets trend in the same direction. Now, that being said, the pairs opportunity comes in the fact that, wow, there are huge differences between NASDAQ and Russell, or S&Ps and NASDAQ, or the 75 SME and the Russell or the NASDAQ or whatever. And so what hopefully is kind of populating in your mind is all these permutations of opportunities. Already, just looking at 5 equity indexes, you've got now a handful of opportunities that aren't just, I have to choose red or green for the stock market here today. These relationships do allow for a lot of opportunities, but let's focus on those 2 characters that we led off with, the 75 SME and the STX SME. You can see this correlation, positive 0.75. That's a nice positive correlation, and correlations do run from -1 to +1. So what we have here is one that's close to that positive extreme there. And I usually am looking for, if you do crunch numbers and you are looking at correlations, I'm usually looking for anything that's above positive 0.5 or below negative 0.5 as being strong enough for a pairs trading opportunity. Now, when we have a positive correlation like this, that means these 2 things trade very similar. If one's up, the other one is most likely up as well, and vice versa. So that is a buy-sell pairs trade opportunity. Now, if we had a negative correlation here, which would mean that one of the markets moves higher, the other one tends to move lower, and vice versa, that would be a buy-buy or sell-sell pairs trade. Those can be a little bit trickier. So let's continue to live in this world of buy, sell. So hopefully you've got a little bit of the idea generation piece, what we're looking for when we're diving into the equity world and putting things against each other. Now let's look at how we actually get these things on here and how we compare them to get to a ratio that we want to trade. Because, you look at Apple stock versus Amazon stock, those two things don't look like each other. So I don't necessarily want to trade one share against one share in there. And so what you're looking at here is the price times the multiplier. And in stocks, relatively simple because it's just the price times the number of shares that you want. And what you want to get is obviously equal weight on both sides so that you aren't, having extra exposure in the front leg or the back leg of your pairs trade. What you can do if maybe you become a pairs trading wizard and you want to take the next step and be like, I'm going to start adjusting this by volatility. That next step is adding just one more parameter here. I don't think it's necessarily, especially when you're comparing two things that are so similar as the 75 SME and the S&P, or the 75 SME and the STIX product there, the STX. You can feel pretty confident that their volatilities are so close that I don't necessarily need to add that parameter, but you'll see here in a different example where you might want to add that volatility piece. Now, back on the 22nd of January, when I put this together, we had prices for 75 SME of about 66 bucks, STX about 64 bucks. All small exchange futures have the same multiplier, which is $100. And you can see here that that helps you arrive to pretty much a 1-to-1 ratio. Now, sticklers out there might say, hey, there's $200 worth of difference. And I would contend, as someone who has pairs traded a lot, that $200 is not that big of a difference, especially when you're talking about product sizes that are in the thousands here. Because trust me, I've gone down this road of trying to get it literally so that there's no dollar difference, and you're going to end up having like to trade, 60, 75 SMEs to 63 STXs, and no one wants to get that crazy with it. So this is what's really nice about the small exchange futures in equities and other asset classes, very similarly priced, don't have to worry about any crazy ratios. Now, when we get outside of the small world and, maybe I want to trade some IWM shares or IWM options around this 75 SME contract, you can see it's as simple as comparing that stock price, which was at $215, and finding, okay, I need about 30 shares of IWM, or those options traders out there know, well, if I buy 175 SME, I could sell a 30 delta call, or a call spread that's short the 50 delta, long the 20 delta, bunch of different ways to now dive into just one of the permutations of pairs trade. Now, I want to go outside of that equity asset class to show you an example of when I would probably rope in volatility to the equation here, and that's when we're going from stocks to energies, for instance, both considered risk on markets. So in the long run, they tend to trend in the same direction, but as you can see here, crude oil showing a volatility that's about twice that of the 75 SME product, or just equity indexes at large there. So you're going to need a little bit extra exposure in that 75 SME or equities to make up for that greater volatility in crude oil. And this is just an example. This isn't the first place that I would go, but I just wanted to show you all an example of both adjusting the pairs trading ratio for the notional, which is just the product size, and then also adjusting it for volatility when you do get into more creative pairs trades that are outside of that single asset class. But let's bring this back here, because that trade ratio lets you take an opinion on how two markets could relate to execution in your platform. And thankfully, these small products let you do that relatively simply with the 1-to-1 here in 75 versus STX. And it gives you, a pretty easy execution of these different benefits that we have rolled through here before. I mean, I've had experiences when I first came out of college there. I went to Board of Trade and we were trading all these different interest rates, which I'm excited to get to here in a second. And it was a lot of, 3-to-1 here, or 5 to 3s, and We would also, after you do a couple of pairs trades, you might look into the butterfly spread, which is 3 legs. And I remember having to put on this spread trade that was like 7 to 12 to 3. And so just a really nice note about how small exchange futures can allow you to speculate on relationships, not direction necessarily of those assets, or offset some risk, which we'll get to here in a second, and diversify that portfolio. Simple one-to-one, very easy execution of this new unique trade that we're looking at. Now the question becomes, cool idea, Frank. I understand different permutations of this. I understand, maybe trading technology against energy stocks, or what we're looking at here, technology against the stock market at large. But where do I perceive the opportunity? This is the next question that I get so often, is like, okay, when do I put it on so that I make money? And unfortunately, I don't have any, golden number for you to trade this spread at. But what I would contend is, think about these pairs markets and the different opportunities the same way that you think about opportunities in the outrights themselves. If you trade based off of price action, which might be, oh, this market's at a historical extreme, so I'm going to get on the other side of that extreme, or I'm going to go with that extreme. Pairs offer you a pretty similar setup, especially when you visualize it, think about it as just this one clean line here, this one singular price. You can see multiple times where, oh man, this relationship got down to, negative territory, and it bounced off of those values. That's a simple price action trade that you could think about the same way as the stock market at large. Oh, multiple days of selling, moving lower in that equity market, and I might look at picking some up. The same with this pairs market. Oh wow, it's bounced back a lot. It's rallied many days in a row, and I think maybe it's due for a little bit of a retracement. It's truly liberating to get over the hump of, okay, it's no longer one market, it's two of these markets together, but I can think about it as its own singular opportunity here and trade it the same way I would anything else. Those of you out there that like to look at trends, absolutely a ton of potential for pairs trading, just via these trends as well. You look at the fact that technology from 2010 until this year has greatly outperformed energy, and pairs trading allows you to just take that idea, take that trend in your mind to a practical trade very easily. I think that technology is going to continue to outpace energy, so I buy tech, I sell energy. Oh, I think that these two should converge. It's not sustainable that technology continues to beat up on these energy stocks. I sell technology, buy energy. That's a nice way to think about things as well as economics. This has been a huge one recently, one that I'm particularly very interested in, which is the stock market relative to the interest rate market. Because you go to your Econ 101 class, or you pick up any introductory economics textbook, and there's almost always a conversation about how interest rates function in the whole economic organism, stocks, companies and everything else. And you can attribute your views on how interest rates and public companies will trade in the future with these pairs trades as well. One that I've definitely looked at recently, and I know the Fed is battling back and forth with individual traders on, is how can this equity market soar higher and the economy start to pick up here, and knock on wood, as we hopefully exit this pandemic, and interest rates still hold near zero. And so there becomes this intriguing relationship here just based on the economics of everything. And so a couple of different ways to view opportunity that are all essentially, at the end of the day, I buy one of these things, I sell the one that I don't like as much, and I'm no longer trading on the fact that these things need to go up or down. I'm just trading on that they converge or they diverge, that their relationship changes. And now I want to get to a little bit of that risk offset section of the presentation, which isn't the most creative or inspirational section, but it is huge for the everyday trader or the small trader out there, because you look at the y-axis of these two markets, and we do love the fact that we are the small exchange, so our products are relatively small to those traditional futures. But that being said, the last year of action has been about 30 to 40 points in the 75 and the STX products here. So that's about $3,000 to $4,000 of movement in the last year. May not seem like a lot to some, but is still a lot of movement notionally to that small everyday trader. When you add these two things together, and I can't guarantee this doesn't happen all the time, but most of the time, the difference between two highly correlated markets contributes to a smaller y-axis and smaller notional moves. It's the same time frame, two small exchange products here, two equity index futures. And what you see now is a y-axis that's been cut in half. So instead of the last year of movement in the individual products themselves, instead of individual products themselves moving about 3,000 to 4,000, you've got here the pairs market that has moved about $1,500 in the same time frame. So unique opportunity that can work towards offsetting risk and increasing the duration that you are in trades here past, I know a lot of people out there, myself included, who've wanted to try out equity index futures, and you go to some of those traditional products and you can literally only try them out for a few seconds or a few minutes before they've moved a couple $100, or on big days a couple $1,000. What's really nice is these pairs markets allowing you to maybe feel a little bit more comfortable and stay in the trade a little bit longer. And yeah, another note, I just love to hit on the fact that this is very diversified outcome here that you are trading on. You see the stock market that since March of 2020 has just climbed higher, climbed higher, climbed higher. And then that pairs market in there has just seen a bunch of back and forth as equities move higher on the whole, technology outperforming and underperforming that equity index at large. Now, before we get in there for some questions, and maybe I hang out with Andrew a little bit on the IBKR platform and look at some of these products, I do want to bring to your attention, just last week, added some interest rate products, and this has been a really fun one for myself and a lot of traders out there. The 2-year, the 10-year, and the 30-year yield from the small exchange. Multiple sizes here that are just reflections of the yields for those different durations. You can see there that 2-year, just about $100 product, margined, around $50. You'd be hard pressed to find any futures market that is that small, allowing you to just test out the product type of futures here for a smaller bite. And you've got that stacked up to the 10-year, about a $1,300 product, and that 30-year yield. And so yes, these products are very young. They haven't been trading even 10 trading days here, but we're very excited about them. And they have their own really, really unique pairs trading opportunities that are actually kind of cultish. You'll see if you do get into it, you might find yourself really wrapped up in this universe of the yield curve, because what you have with the S2Y, 10Y, and 30Y here is a really simple personification of the yield curve that allows you to say, hey, I think that this yield curve is going to go flat. I think the 10Y and the 30Y are going to come lower. You can sell that and buy the 2Y there and trade on flattening, or you think the yield curve is going to steepen and start to normalize. You can trade pairs trades, selling that 2Y and buying the 10Y or the 30Y. A lot of interesting pairs here for the everyday trader to finally grasp in a very simple and small product relative to those traditional larger interest rate products that are reflections of bond prices, that can be more difficult for people to kind of understand and get going in their portfolio. And so what you have here, like I said, just a representation of the yield. So in silver, you have this 2-year yield that has kind of been unchanged on the year, hasn't really moved that much. Whereas you have, if you've been reading in the news, you'll know that 10-year and 30-year yields have climbed a lot higher. Actually, that 10-year yield right now flirting with almost 1.5%, as that 2-year yield, which is sitting down there at about $1, that's very close to 0%. And just to let you know, that 1.5% would relate to $15 in the 10Y product. And then that red line there, the 30Y product being at about $20, that's 2% in terms of the yield. And so, very hopefully we feel simple representations of the yield. And you might say, you know what, Frank, I can't believe that you come onto this presentation and eat up my time with something as boring as interest rates. But you might not have seen the fact that 10-year yields are outpacing everything that isn't really cryptocurrencies at this point. A lot of people coming to us, oh, I want to trade oil, or I want to trade corn, a bunch of agriculture movement this year. And we love the fact that newer participants in the market, they want to see different products, they want to see different asset classes outside the traditional stocks. But this 10-year yield alone has outpaced these other asset classes, has really moved around. And now, getting back into that pairs trading vein, what if I told you that it's highly correlated short-term brother here in the 2-year, essentially, the same product, it's a yield on the US Treasury, just a different duration, actually lower on the year. Now that is a really intriguing pairs opportunity, and that's when we rope in terms like steepeners and flatteners. And I welcome you to this world that is at times very cultish. It's where I started out, and something that I monitor on a daily basis, where rates are moving, if they're moving higher or lower, but also if those rates are diverging, which would be steepening. That yield curve is getting steeper, those interest rates are getting further and further apart. That 2-year yield is staying at 0 as the 10-year climbs. That is called steepening. Flattening is that yield curve is getting flatter. Those interest rates are getting closer together. That would be if the 10-year came down closer to 0, or what's really nice about this, that 2-year could just climb up to where the 10-year is. So many different opportunities when you start to add markets together and create pairs like the famed TUT spread, which I've traded many times historically. But when I was at the Board of Trade and everywhere else, this has been historically a hard trade for people to get on with those larger traditional clunky products that were made for bigger institutions. With the new products from the small exchange, the everyday trader can look at this TUT spread, just one 2Y SME to one 10Y SME, and you can see that the steepening has gotten to a difference of about $12 or $13, which is just 1.2 or 1.3%. Hopefully easy for you to grab onto what these prices reflect and what they mean. And then also another one that those in the interest rate world love to toss around, the knob spread, the 10s to the 30s. Not as intriguing, maybe a lot more back and forth, not as much of an extreme as that TUT spread. But here we go, man. We've gotten outside of that equity market and some very cool, unique opportunities in pairs trading those to interest rates with these small products, all margined at, as high as just a couple of $100. And you put them against each other, you've got some really interesting yield curve relationships that don't necessarily, depend on you saying interest rates are going higher or they're going back to 0. You can just trade those relationships, flattening and steepening. And interest rates aren't new. They're not in vogue like some of these new cryptocurrencies that Elon Musk is tweeting about. but they have been moving a lot recently, showing a lot of opportunity, a lot of people now monitoring what Fed Chairman Powell is saying and how that's affecting markets. And this 2Y, 10Y, and 30Y SME product, hopefully allowing you to get in on all of that movement with some relative ease. These are margins from the small exchange for our 5 main products, and then also that 2Y and 30Y SME product launched just last week. And what's great is historically using those larger futures products, you'd be hard pressed to find a pairs opportunity that you could get done for under $1,000 or $2,000. The smalls help to let you achieve that with a smaller margin and hopefully helping you to feel less like you're overextending yourself with those bigger products and maybe a little bit more feeling of comfortable when you're trying out new pairs opportunity. And before I finally get a swig of water here, which I've been staring at this whole presentation, and we bring Andrew back in for maybe some questions and a journey through the platform at IBKR to maybe look at these products. I would be remiss not to bring up the subscription from the small exchange. Really cool offering that we are right now extending your way for $100. It's a one-time payment, lifetime of the subscription offering. You're going to get 50% off of the exchange fees. So exchange fees from the small exchange already very small. We're going to cut those in half for those of you who join our community here. You're going to get chances at limited edition merch, like we're giving away here in March, hats to subscribers who trade the 3 new yield products here. So some fun stuff like that. We're sending out weekly emails, a bunch of advanced stats and metrics around small exchange products, including correlations and standard deviations and everything else exclusive to those subscribers. And then, of course, like I spoke to on the front of this, probably the most essential thing is that you'll have those fees, those exchange fees, cut in half for life for this one-time payment here of $100 for a limited time offer. So hopefully you take a look at that, subscribers.thesmallexchange.com. And with that, my shilling is over. My presentation has concluded, and I'd love to take some questions and potentially look at some of these trades with Andrew. Thanks so much for having me.
All right. My first question, Frank, is, you know, you said at the beginning that this guy is in my top 5 people here.
Yep.
Why not the top 3 or the top 2? Who else can possibly be in here? Anyway.
Rankings are a funny thing, Andrew. You know, where you feel like, oh wow, I put this album in my top 10 of albums, but then yeah, essentially if you're not number 1, you're last. But Andrew, I swear to you, you are definitely near the top there, man.
What was that old quote from, I think it was Groucho Marx? I would never want to be in a club in the club of with anybody whose club would have me as a member. Something like that.
Yeah, no, that that makes plenty of sense.
All right.
There, man.
So we've got a few questions coming through, Frank. So we'll get to those in a second. I just wanted to, I had a question on the stocks one to begin with. So the 2 baskets of stocks we're looking at. I mean, you showed the example in one of your slides about Tesla being in one group. I mean, I'd like you to address that a little bit deeper, really. I mean, what are the weightings of the relative baskets here? Is it like trading? Are we saying that Tesla it has a heavy weight in that particular index or not? I mean, what I'm saying is, are you able to kind of trade, using for a trade queue here, a prompt to get into something, whether you believe Tesla, for example, is ready to correct or ready to accelerate?
Sure, yeah, I'm glad that you bring that up because that's a big point of contention, pairs trading some of those other equity indices, because they tend to be very top heavy. For example, that NASDAQ, I think it's like like 20% of that index is the top 2 names. It's 100 stocks, and Microsoft and Apple take up, I think, more than 20% of that index. And I believe the top, and now you and I are talking about ranking each other as friends here in the financial sector. But when you talk about the top 5 in NASDAQ, that actually makes up almost 50% of that 100 stock index. The small exchange products, though Tesla is the largest component currently of that 75 SME product, Andrew, it only tops out at about, I think, 2 or 3% in the weighting. Now, we make sure that our different equity index futures, the 2 that we already have and the ones that we're looking to add down the line, none of the stocks get too crazy overweight there. So you are hopefully at the end of the day just trading something that has Tesla in it, but has 74 other names that exemplify the stock market at large without being essentially a Tesla market with a couple of other stocks in there. And so, yeah, with the 75 in sticks, you're getting a good holistic exposure of that stock market versus technology names, and they're both pretty equally distributed amongst those names.
Right, that's a great answer. And Frank, are the the composition of the 2 different products there, the 75 and the STX, are they displayed on the website somewhere?
Yeah, if you go to thesmallexchange.com and you find those, yeah, absolutely. Let's go into it. Smallexchange.com, and what you'll see on the right rail of the website here in a second, if you scroll a little bit, we got a fun little GIF there of our yield curve. If you click, either of the products,
by the way,
technology.
I guess that's already in the mail to me as being in your top 5. That hat that we're talking about. No.
Oh man, you're gonna get one of the exclusive limited runs of that. We're sending out about like 100 of these nice white hats to our subscribers. I'm gonna personally tie-dye one and send it your way. You're gonna get a 1 of 1 on the hats, man. But if you go into the small technology or the 75 there, you'll be able to hopefully pretty easily find some nice information here on the movement. But if you scroll to the bottom, you will find a link to our indexing agent right there, and you can dig in. It's not my favorite place to go on a daily basis. I'm more like to keep that IBKR trade page up and trading stuff around. But if you want to look at this stuff, what you'll find here is the share distribution of all the different stocks in the index. And you can thereby find the weightings, and you can see here that they look, first of all, they all look really small, right? But they're all, upon creation of this index, they are those small fractions so as to make them all pretty even on a percentage basis. So yeah, go in there, dig in. It's not my type of Saturday night necessarily, but all that information is at your disposal.
Right, perfect. That's great. From my perspective, I always want to know what it is I'm trading. You're an expert on the 2s, 10s, on the interest rate products in watching that stuff move. And I think for a lot of people, you really have to kind of get down to the nub of what it is that you're trading, and that's the kind of information that I would want. I'd also probably add some page here, some of those. As you just discussed, there aren't larger weightings in there, but I'd certainly want to add a few of those stocks to this page so that I could keep an eye on the direction of them. Okay,
absolutely.
But that said, let's have a one of the questions we've been getting is, how do you do this as a combination? So you'll see, folks, I've added the 75 and the STX individual small futures contracts at the top of the page there under my header stocks. I've got my 2s, 10s, and 30s, the 2Y, the 10Y, and the 30Y listed there. So you're seeing the live quotes on everything, or the delayed quotes perhaps. And then the precious metals, the small precious metals contract. I think I'm looking at March and everything. And then I've put in a couple of spreads. So I've put in if I hover over that, the 10Y minus the 2Y. So if you look at the bottom, and I'll show you how to create this in a second, to buy the combo means therefore to buy one of the 10Y SMEs, and you'll be selling one of the 2-year SMEs. Likewise, with the 75s versus the STX, the way we've constructed this. And we've constructed it, Frank and I looked at this earlier on this morning. In order to construct this to give a positive quote, we had to do it in a certain way. We had to put in the 75 first. So if you look at the individual legs, okay, so you'll see up at the top of the page, the 75 is trading at 71 even bid, and the technology, the STX, is trading at 62. So it makes sense to get a positive quote. We've got to subtract the 75 from the 60. Okay, so we're going to get something like 710 or 810 rather, because I just can't do simple maths. I'll leave that studied at college. So you're seeing, yeah, we're getting about an $8 spread between them. Personally, I don't like dealing with negative spreads. I'd just rather see the a positive net number on the page. So that's what we've done here. So to create that spread, and again, we're going to start off with the 75 SME. So I'll type that in just to bring up the combo selection tool. 75 SME, hit enter. And instead of selecting the futures contract, which I already have on the page, I'm going to go to combinations and future spreads. It's going to bring up the combo selection tool. There are 3 tabs: multiple, strategy, pair, leg by leg. I can work it from the multiple here. I actually want to go over to the pair, and I got to start over in here. So again, 75 SME, and select. I'm going to select the continuous March contract, and then I'm going to be selling the STX SME, and again hit the continuous March future and X out of the selection box there. And now that we've constructed it, we've got buy on the left hand side under the action and sell for the second line. Click OK. And I already had it on the page, but there it is. So now it's now moved out to 808 bid at 823. So you'll be buying the 75 versus selling the technology stocks, right?
And that's a bit of context there, Andrew. Thanks so much for running through that. How to once you get all of those letters and everything in there, it's very easy to access here in the beautiful IBKR platform. So I appreciate you doing that. A little context: that's actually a historical extreme in this spread to the upside. The 75 over the sticks going back the last few months here as we speak. It got as high as $6 a couple of days ago, climbed to $7, and now it's all the way up to $8 here. As you can see, yeah, the spread markets are one of the toughest things, no matter how great the platform, this IBKR platform is a fantastic one. Visualizing them in the platform is very tough, especially when you've got futures products that expire and the new continuous one pops up. But yeah, you can see a little bit of this history. This actually looks pretty good here, whereby this is a spread that's flirted with 0, which would mean just that both of the futures trading for the same value. It's flirted with 0 multiple times over the last couple months, and now has just ripped to the upside. So whether you're a trend follower or a contrarian, an intriguing market right here in the moment, kind of working pretty nice for us coming off that presentation, looking at a historical extreme in this spread.
Right. Brilliant timing, Frank. So I come back to my order entry panel because I'm engaged with that particular combo line. To buy this spread, I would click on the buy button. You'll see I've got a quantity of 1. We're just going to show what one futures contract would cost, and one combination would cost in terms of margin. I just need to fiddle here with the allocation button so I can display that fact. And I'd put in I'm going to leave it as a limit price, and I'm going to put in $8 even. I'll leave it as a day order, click submit, and you'll see that my maintenance margin there for a single contract to buy one, sell one would be $1,871. Does that seem about right to you, Frank?
Yeah, that's probably about right. Yeah, the margins from the exchange for both of these are about $500, and I think the margins here are just a tad higher. But it's crazy because, Andrew, when you look at doing like S&Ps versus NASDAQ with those traditional futures, those contracts on their own are north of $10,000, and when you add them together, It's a very costly trade. So getting a pairs done here under 2 grand, very efficient use here of capital for the pairs trading at IBKR.
That's funny you should mention that. I had a call last night with a guy who came to ask me the question, what's the margin on an E-mini futures contract? And from recollection, and I'm going back maybe 10 years when I used to kind of look at this and write about it every day. I seem to remember the margin on a single E-mini futures contract was about, I don't know, maybe maybe $7,000. These days, because of a couple of things: one, all-time highs, therefore the risk is higher, but also the volatility during the pandemic, where markets are swinging wildly. You know, the intraday high and low is very high. The margin on the E-mini nowadays is about 23,000, Frank.
Yeah, I was gonna say I didn't want to age you there, Andrew, but that does sound like 10 years ago where the margin was four or
Right.
5 grand. Things, yeah, about almost up to 20 grand, depending on where you're trading. Is craziness.
But that's the funny thing, is that the E-mini, you know, the clue is in the title. It was meant to be.
Andrew, I joke about this constantly with our mutual friend Peter Momat because they launched, and this isn't disparaging. I quite like the micro E-mini products, and especially if you want to trade, the 75 SME against micro S&Ps or micro NASDAQ, the technology actually against the micro NASDAQ, very cool trade. But it is funny to me. You and I are kind of more wordsmiths when it comes down to it. When you launch a product that's called micro E-mini, something's gone south, right? Like like it's like, is it mini or is it micro? And then the mini one is $20,000, so it's not very I don't know who's that large that's mini. It's craziness, man.
Well, it kind of begs the question: what's the margin on the big contract these days? I daren't look.
You don't even want to look, man. I don't even know.
Even the biggest of the institutions might have a hard time with that. Okay, so we've set up a combination. We know how to add the symbols to the monitor page. We know how to add a combination. We know how to add a trade. I'm actually just going to transmit that one, send it out to the exchange. You'll see on my activity panel in the lower left, there's my combo: buy one, sell one, limit price of 8. Might get filled during the presentation. Definitely something to watch. So let's have a look at a couple of the questions coming in, Frank. I know somebody had a question here. Well, yeah, take this one with a pinch of salt. This is from Stefan. He said, are there any proven strategies that are known to get good entries and exit when trading pairs? So that's a very open-ended question.
So yeah, that's an interesting one there, because that's essentially asking like about legging, which is really a two-edged sword there, because legging into a trade, which is just a colloquialism for the idea of like not sending it as an order there, because what Andrew could do if he wanted to get super cute with it was he could buy that 75 SME, maybe work the bid, put in a price that with the market right now bid at 70.59, maybe he works like the 70.50 even and try to get that on, and then say to himself, but I'm going to get really smart and then sell that technology on its own after I get filled and try to leg into this trade, and whereby hopefully getting it on at already like a 10-cent or 20-cent profit. That's an interesting thing if you're an advanced trader and you've looked at pairs before and you've legged them individually before. It's intriguing to look at. At the end of the day, I usually advocate for beginners and just people, myself included. If I'm trying to get a pairs trade on, and I think there's opportunity in this technology product moving lower against the small stocks or moving higher against it, the last thing I want to do is screw myself over before I even get it on, because there is a good amount of risk with trying to leg that. Because what happens, Andrew, when you put in that bid at 70.50, both those stock markets move lower by a lot, and I miss selling the technology. And now I'm just long the one piece. I didn't want to just be long equities. I wanted to have the pairs trade on. So it's an intriguing thing that I would advocate for the viewer, sorry, I forgot his name already, awful with names, especially if you're not in my top 5, which you could very well be. We'll see where this relationship goes, viewer X. But it's something that I would say is like a day 2 strategy to look into there, with a better entry or exit, basically asking about legging, which can be a difficult task, but an intriguing one. But yeah,
Yeah.
day 2 kind of thing to look into.
Right, but let's think of it from a different perspective, though, Frank. You know, you can backtest any of this stuff, and you can look at entry and exit points. So I would be inclined to, you know, give a slightly different answers to Stefan here. You might look at putting moving averages underneath some of these relationships and
Oh,
identify
yes.
differently. Yeah.
Yeah,
Um,
no, okay. Totally got you there. Yeah, absolutely. I mean, and this is what I kind of tried to advocate for in the presentation. If you've got entry and exit strategies for individual markets that you want to attribute to these pairs, I love, yeah, like testing them out,
mm,
using back testing tools and everything else, and attributing those same strategies to these different pairs markets. You've essentially just constructed a new market for you yourself to attribute those strategies to. And yeah, if that is Stefan, that might be a friend of mine from Twitter and life in general, Dr. Zayas, who's, I believe, a Canadian IBKR trader. Thanks for the question, man.
Adds to that with when will the small exchange have some crypto products? Same guy.
That is absolutely coming down the through our pipeline very soon. Right now, we are looking to. It's funny. We added these interest rate products, and thankfully, there's been a lot of movement in interest rates, and it's been I one of my favorite asset classes to trade. So it's been fun for me. But yeah, the next thing is going to be hopefully a couple of big bangs with our next products, oil and crypto, in the coming. I don't hold me to it, but I want to say 2 to 3 months here. I feel like we're at a really good place with adding both of those, I guess, more traditionally sexy markets here in the near future.
I have a question for myself. In fact, what this is for you, Frank. Are you
Yep.
seeing my screen? Okay.
Yes, sir.
You are good. Because somebody said I think somebody could not see anything. Right. No, that's okay. Just a slight problem there. Okay. All good. I think we've probably already addressed this, but I'm going to throw it to you anyway. What's the advantage of trading these pairs on the small exchange versus using ETFs put on these spreads?
Sure. So what you're going to find with ETFs is, yes, you're going to get, and this is the way that we try to market the products as a whole, but it pertains especially to pairs trading opportunities out there, is with ETFs, you get similar flexibility to the small exchange futures, which just means you can get down to a share or a couple of shares and figure out what fits your account size best. And that's what we like to advocate for the smalls. You know, they're smaller futures products. And so you've got the same flexibility as a few shares of ETFs and stocks. The advantage of using these small futures, though, Andrew, is the efficiency of your capital. Because what you'll see is you'll put, you know, maybe a share or two of QQQ per se against a share or two of SPY, and it's going to tie up, you know, I mean, at this point, if Qs are a couple $100, SPY a couple $100, so just putting one share against one share, already getting you above $500 there for that trade. Or if you margin at 50%, still, you know, $200, $300. And that trade is not going to move a lot. And your capital there is very inefficiently being used. You're putting up a lot of money for a pairs trade that's just not going to move a lot. And so we find a sweet spot here with the small products that give you that flexibility, but also the efficiency of futures. So you're getting a good sweet spot of not tying up too much capital and a trade that is moving back and forth for me here. So I'd say that is the advantage of going to the small futures as opposed to those ETFs, which just demand more capital per unit.
Thank you, Frank. I'm just looking through the rest of the questions here. Pedro asks, investing in interest rates, is it done through options, futures, or ETFs? It's very open-ended for you.
So no, that's totally fine. Traditionally, I would say the everyday investor out there has probably gone to ETFs like TLT. Just a cursory Google search will usually spit out that TLT or that TBT or what have you. The products that you see in front of you here, 2-year, 10-year, and 30-year U.S. Treasury yield, those are technically futures. But what's really nice is that they are smaller priced futures, so that they look and feel like an ETF. And like we just kind of hit on there, they use your capital more efficiently. Not to mention that that TLT is actually a bond price ETF. And so this is something that I've tripped over in my years of working in education on trading and everything else, which is you read an article or you do whatever research and you think yields are going higher, and you go to that TLT product, Andrew, and you actually have to sell it because yields are inverses of those prices. Why would I deal with that confusion? Not to mention that it is, this ETFs like we just talked about, inefficient use of capital there, when now I have the 2-year, 10-year, and 30-year where I think yields are going up or down. It's a direct representation of that 2-year right now, that bid at 146, just $146 in total notional size, a small product that lets you try out interest rates pretty easily. So I would advocate for those small futures. But yeah, there's, the same as stocks, you can invest in interest rates via futures, ETFs, or, anything else, options as well.
Deb Brata has a series of questions. I think we can only answer one of these, maybe the second one, but he asked the question about trading pairs that you may be sure are going to diverge or converge, such as selling utilities and buying technology. Do they work? Well, I'm going to just jump in here first, Frank. You can, on the Trader Workstation platform, you could create what do we call it now? A virtual security. And so, for example, if you took the SPY as your proxy for the broad market, and you took the XLF as your proxy for the financial sector. So, for every, I think there's 11 economic sectors, including real estate nowadays. You could take any of those proxies from State Street, for example, and divide them into the SPY, and you could create a series of relative performance benchmarks for yourself to keep an eye on the market, because all the time, technology and utility and energy and consumer staples, they're all moving at relative rates to the benchmark, which is the S&P or also a NASDAQ. So you can look at anything as long as you have a good proxy. And I think this is one of the really interesting facets that Frank brings us today, is to look at that relative performance. And what you're basically doing is taking a view that something will continue to diverge. And in the case we were just talking about, where I entered my trade, it was for the technology stocks versus the regular stocks. So it looks like technology's outpacing. So I think it opens your eyes, Frank, doesn't it, a little bit more to what's actually happening in the broader market.
Yeah, absolutely. It's definitely helped me, and I know a bunch of others who we have gotten on board with pairs trading opportunities, to kind of understand this whole ecosystem at large, whether you're in equities or interest rates, or comparing them to each other. It's great for understanding that. But yeah, the one thing that I always get back to is the question always becomes, like, okay, so which of these pairs is definitely going to move the right way? And I always say, like, well, it's the same as, like, when you're looking at the individual products, you don't know necessarily which one is definitely going to move up or down. Pairs is just, it's a different opportunity, but in a lot of ways it's the same as just like, I've got my ideas here. Of course, nothing is 100%. But I can play them out here in a different way in the market. So yeah, hopefully people feeling a little bit more empowered here, some unique opportunities, and hopefully they're using the smalls to get at those unique opportunities.
Yeah, and I can't tell you the number of times I've watched something, for example, just as an example, Frank, watching something like energy and the price of crude oil when it's gone through the floor, and
Mhm.
all of the energy stocks have gone with it, and that they're all overbait to the downside, but you've no idea what's going to happen to the broad market. And it could be it could be that you know, the fall in the price of oil is leading stocks lower because we're talking now about a pending recession, and so the stock market's falling. And rather than trying to catch the falling knife, you might start looking at something like, okay, well, what's the relative performance of the energy sector against the broad market? And that might be something that gives you the confidence to start buying energy versus the broad market, because it's gone down so far, right?
Yeah, absolutely, man. Yeah, I love just the whole idea of pairs is just getting more stuff on your board. Like it's not that like every pairs opportunity is a better opportunity than the outrights. It's just a matter of like I went from having 10 things that I look at per day to now I have 50 things, and
Right.
I can find that different relate. Oh, this one's actually pretty interesting. Oh, of course, on a daily basis, 30 or 40 of those aren't going to be interesting, but Andrew, it's just
Yeah.
simply amplifying that watch list. Putting this platform to use here with more opportunities that have potential out there.
Right. Absolutely perfect. And John is asking the question, how does the 50% discount on exchange fee come into play if one trades through IB? And I know that some of that falls on my shoulders, but I'll let you start off there, Frank.
Appreciate it. Yeah, as Andrew knows, and you maybe could tell, I'm an ideas guy. Like I don't have to deal with all the operation stuff. But that being said, I do understand how it works, and I believe that it is a with IB. I think it's a rebate situation whereby like you say you pay 15 cents per unit as a subscriber, and then I think it's at the end of every month we rebate back 50% of any of those exchange transaction fees that you have used in trading our wonderful products. If it's not that, I know it could also be the other way that we've been doing this with firms like IBKR, which is they get like a specific token, and then every time they pull up a small exchange product, that exchange fee is already cut from 15 cents down to 7. Either way, our operations team has definitely worked with your operations team, Andrew, to make sure that our wonderful subscribers are seeing that reduction in fees.
Have your operations people speak to my operations people. That's great. um,
Absolutely, man.
Sadia's joined late, and I just want to make sure, Sadia, just to save you listening to the entire thing again, I'll mention it here. But what you need to do if you're trying to create a pair is to create a combo. So all I did, all I did was to type in 75 SME and create. I'm just going to move that off the screen. Go to the combinations, future spreads, and then go to my third tab there, pair or leg by leg. So I'm buying the 75 SME. I'm going to select the continuous in this case, and then the STX SME. This creates the combination for you. Select the continuous and click OK. That will add it to my monitor list there. And if I hover over it, you'll see what it's doing. Buying a combo means buy one of the 75s and sell one of the STX contracts. And having engaged with the line, you'll see it's already in my order entry panel in the upper left, and I can simply click buy. Actually, I'm going to sell a limit of 1 for the account that had it. I forget which one it was. Yeah, I forget. For an 8, let's do it for $8.15, and I'm going to leave that as a good till cancelled. Submit. You see there the limit price is now a credit rather than a red debit, because I'm now selling the combination I was filled earlier as we were talking, Frank. So it will be cancelled at the end of the quarter in which it was created. So now I have the sell order down in my activity panel, and you can see if I go to my summary tab that we already bought one at 788. Somehow I got filled at a very advantageous price.
Yeah.
Don't know how that happened, because we saw the quote moving. I guess I've got delayed data, but I got filled nicely before the market's beginning to move higher again.
This is a great walkthrough here of setting up the pairs trading, and also those of you out there who are still here past noon here Chicago time. What you just saw was the pro Andrew Wilkinson in there scalping the pairs market right before your eyes. The guy still has it. It's craziness. He got in at 788. The market's already bid now above $8. The guy's a pro. He hasn't lost a step.
And Frank, on that note, we've run out of questions. I really appreciate you joining me as ever, and I hope you'll come back next month and we'll talk about something completely different.
Yeah.
And look forward to entertaining you then.
Absolutely, Andrew. Thanks as always for having me here. Everybody in the IBKR room, tell your friends over at IBKR and everywhere else about the small exchange futures. We'll be back. Yeah, I'd love to chop it up with you again in a month. We'll talk about something completely different and we'll have a ball, man. It's always a joy to be here with you. Thanks, Andrew Wilkinson.
All right. Thank you, Frank. And regards to Pete Mulmat over there at the Small Exchange.
Of course, man. I'll tell him. Thank you.
Okay, mate, very good. Thank you very much, everybody, for joining us. Please look out in your inbox later today for a link to the recording from today's session, and it will be available on the Interactive Brokers website under Education, Webinars, Previously Recorded Webinars, and the Industry Sponsored tab. Thanks again, Frank, and we'll see you all again later.